Welcome to Dental Brain Crops. I'm your host, Chelsea Myers, and today I'm joined with Scott Haberman. He's a CPA and partner at Eide Bailly. Scott, welcome to the show.
Thanks for having me, Chelsea. I'm excited to be here and looking forward to catching up.
Yeah, I'm so excited to have you here. So tell me a little background on you. Did you always know that you wanted to be in finance? How did you get interested in becoming a CPA?
Oh yeah, right in grade school, I had my 10 key and my visor, and I was very excited to get into the accounting world. No, I kind of fell into it during college. Just started taking accounting courses, and the whole language of a business got me pretty excited and interested, and it clicked right away. And so I stuck on that course and got into public accounting with one of those big four firms out of school, and traveled around quite a bit. And then I decided I was enough traveling. I wanted to set up shop. I was in Seattle at the time, and spent majority of my career there, honing my skills with a regional firm, serving a lot of business professionals and other service providers. And so I made my way out to Colorado, and I've been out here in Fort Collins for the past 6 years, and it's been a great place for my family and I to enjoy the consistent sunshine. And it's September 2nd right now, and it's about 95 degrees today, and it's been that way for the last week and will be for the next week. So it's a big change from the Seattle market. Excited to be here.
Yeah, I bet. So were you working in dental out in Seattle, or is that a change when you moved to Colorado?
It was a change, kind of right when I moved to Colorado. So Seattle's market is a big startup world, as you can imagine, with a lot of tech companies, a lot of real estate developers and manufacturers over there. And so we served a lot of the clients in that market. I was helping a few dentists on the side, pro bono, family members and friends. And when I eventually made my way out to Colorado, I told these family and friends, hey, let's do it on the record. Let me help you out, because they've had their experiences with prior CPAs, and they had a lot of other friends who were needing some assistance and weren't getting the expertise and some of the hand-holding that they really needed in their first couple of years of their practice. And so that's when I launched full-time into dentistry, and have stuck with it ever since. And so I serve primarily growing entrepreneurial docs and their practices anywhere from California to upstate New York. So clients are all over the country. I really enjoy the personalities that I get to work with from a day-to-day basis. Their dreams and their excitement for growth, their challenges. It's very similar to ours, and in the accounting industry, it's all about people, right? It's all about your patients, your clients, and it's all about your staff. And so it's a people business, but we just bring different levels of expertise and service with our clients. So it's a fun space to be in. There's a lot that you can do to help docs grow and point them out to landmines that they might step on, and try to just be their advocate, be their advisor, and just be their friend and be an ear for them to talk to. And so it's a pretty fun space, and I wouldn't choose anything differently.
Yeah, I'm with you 100%. I love working with dentists and dental executives. It's a really fun industry to be in, but you're touching on some important things. So tell me a little bit more about that client journey. So presumably, getting a CPA involved as soon as possible, that's a widely accepted idea, but what does that look like? And you mentioned landmines and opportunities to grow. So can we go both directions? Tell me a little bit about the landmines and things to avoid. And then I'd love to hear more about growing and how we approach that.
Absolutely. So, I'm not trying to toot my own horn about being a dental specialist, but I think a lot of docs out there in the first couple of years will hire a CPA or a bookkeeper to essentially, do their work, but this person's their family friend, right? And so they might do hairstylists, tax work. They might do some manufacturing here and there. So what I've seen docs struggle with is, hey, my accountant doesn't understand my business. They're not helping me with the HHS provider relief funds or the employee retention credit, or they don't know about how research and development applies to my industry. So I think that that's a big issue where there's a lot of opportunities that are missed in your first couple of years of running your business, and just having that person who isn't putting numbers in boxes. I hate putting numbers in boxes. I don't like doing tax returns. It's part of the job, but I think the more exciting part is actually guiding that business to be the point where they know that they're in a good spot, the best spot possible for tax purposes and for business purposes. Just knowing about profitability levels. Hey, how do I compare to my peer group? Am I overspending over here? So those are the conversations that I like to have that I think can really change folks. After they've seen, okay, I've been being served by the CPA down the road, and it's not really working because I see there's some lost opportunities here. And so those are the issues that I see, is just the missed opportunities right off the bat, and they add up over time. So there's a lot of dental CPAs out there. There's some good people in the marketplace. So if you're not working with somebody that does strictly dental, I'd really recommend considering it, because I think there is a lot of meat on the bone that is being left out there for tax reasons, and just being able to guide you and become a better practice.
Okay, so getting someone who's really knowledgeable in the space involved is important. And then let's say I've got that. What does it look like? How does the relationship change as I go to grow from 1 to 2 to 4 practices?
So as docs, you're not coming out of dental school learning how to read a financial statement, right? And so you come out with this great expertise on how to serve patients, and how to take care of them, which is primary number one focus for a doc, right? But as a business owner, you don't get the training on how to read your financials, or how to have these discussions with CPAs or with attorneys. You don't know the right questions to ask, and that's why you got to line up with someone who knows that business. And so having those financial statements from your accountant on a day-to-day basis, or what we'd like to do is get those monthly financials pretty close after month end, is, hey, let's take a look at your financials. And it's not just, okay, revenue and expenses. It's really breaking them out and understanding, hey, what are you spending on supplies? Is this comparable to market and your peer group, or where you want to go? What should it be? What can we do to lower that? What about labs? What about payroll? That's a big part of your overall spend for the month. Just really managing your overhead and getting that under control, because I see that some docs have 70% overhead and they're just working their fingers off every day. And it's a hard industry on your body, and you can't do that for 40 years. It's going to break you down physically. So how do we manage your overhead and increase that profit margin and get you to the point that you want to be as a practice owner, just so you can have less time in the chair and more time managing your business. So having a quality financial statement where you can compare period to period, year to year, and having those discussions with your CPA or business advisors is super important to get you to the next level.
Yeah, that makes a lot of sense. Gosh, and it's also just a relief having someone who understands it as well as you do, or another advisor, so that you don't feel like you're on your own, because it can be really daunting, particularly when you understand what you're looking at, but you don't know how to apply it towards your goals.
Right. Absolutely. Absolutely. Especially when you're scaling and say you open the second location. Okay, first location's doing great. We're going to open second location. Well, we got to see what that second location is doing. We know from the practice management software, hey, what are the collections? What are the services we're providing in the second location? But what's the overall spend in that second location? So sometimes I see all the locations are combined into one profit and loss statement. So you can't really break it out and see how you're doing office by office. Right. So really having something simple as separate credit cards for each of the offices, separate bank accounts for each of the offices, so you can understand what's my spend on a month-to-month basis by office. So important, just so you can have that financial clarity to get to that next level.
Yeah, and the peace of mind, because when we were growing our practices, you're right, there's that piece. And then there's also the component of, I'm only seeing from my lens, but having someone like you who's seen, hundreds of other operations and how they're doing it, you may be able to foresee or understand things that I don't, just because this is my only experience doing it. So I really love that aspect of it. Tell me, what are some of the, you and I beforehand were talking about taxes. What are some of the tax strategies that are relevant now in dental today that may not have been before?
Yeah, yeah, and we were talking about this. Financials aren't really a sexy topic. It's not really a hot topic in the dental industry, but it's important, right? Because if you have your bankers asking you, "Hey, I need a quarterly statement. I need this or that, so we can, make sure that we're meeting those loan covenants." They're important as you're growing. Maybe as a single doc, you're not really having to meet those covenants, but as you keep growing, you got to have quality financials. And if the balance sheet isn't right, the P&L isn't right, they can tell.
Mm-hmm.
And so you want to make sure that that quality meets their requirements and their needs, because that access to capital is very important as you're trying to scale, as everyone knows. So that's a big deal. But then there's also the tax side, right? Okay, so CPA's job is to make sure that you're doing things correctly in front of the IRS, but also I like to tell clients is, be aggressive, but don't be abusive, right? And so work within the lines of the IRS, the Internal Revenue Code and regulations, but also there's regulations out there that allow you to take advantage of numerous potential options that are out there. And over the last couple of years, things were changing 100 miles an hour, right? When COVID shut down, there was a ton of legislation that came out in March of 2020. So PPP loans and employee retention credits and so forth, that really accelerated the change. It was really affecting the industry where, folks were probably writing off their home office and their car before, but nothing really changed in the last, 10 or 20 years in the dental industry. And so now we had the PPP loans that came out. So there's a ton of cash that was infusing our docs businesses. And then also, the HHS provided relief funds. They kept on pumping more out in round 2, 3, 4 if you qualified. And so, how do you report those items correctly? Thankfully, we're kind of past the PPP revolving wheel of rule changes. But then also, as part of Trump's second passing of legislation in December of 2020, and that opened the doors to the employee retention credit, because most docs took the PPP loan. When that first legislation came out, it was one or the other. And the PPP loan always made better sense 9 times out of 10, because it was tax-free money. And then also you had these standards where they weren't as tight as employee retention credit. And so when that second legislation passed, it opened it up to, you can use both of them now rather than one or the other. And then it also loosened up the rules for claiming these employee retention credits. And they're pretty substantial out there for practices. Number one, it's beneficial for cash infusion into your business. And number two, you can use it to potentially grow and keep scaling your practice. So those are pretty important. And the dollar figures on those are extremely high. So it's on an employee count. So the amount of the credit is $5,000 per employee for 2020. And then they open it up in 2021 to be $7,000 per employee per quarter. And so if you have 10 employees, you can do the multiplication. That adds up to a lot of money. So down the road, you can apply for these funds and receive a lot of cash in. It's taxable income, but the kicker is it's going to take about 6 to 9 months to receive it from the IRS because they're so slow. And that's the bummer part about it. So that's something that every doc out there should look into. And there's a couple tests to get that money. It's either a revenue decrease test, or there's some other gray area where it's essentially a government standard that are put into place during a certain time period that might have affected your production. You might be still making the same money, but you might have had to increase your office hours, or say you had to keep your operatories open for 15 minutes between patients. No one can go in there. And so there's certain standards that states or counties would put in place that you could capture some of these credits. So have your payroll company or CPA look into this before you get too far into 2023, because I believe it expires in 2024. to be able to go back and capture these credits. So that's a big deal that every doc out there should look into. California, I think that they kind of got the short end of the stick, because from my understanding, working with our ERC team, the government had recommendations, but they never had requirements for certain shutdown rules. There could be counties out there that are more tight, but the ones that we looked into, they were pretty limited in their requirements. So check with your advisor and ask about the ERC funds, because it's a big deal and it's money on the table that you can apply for.
Wow, that's so interesting. I'd not heard of that. And I'm not
Yeah,
sure that I would have. But
it's a big, I think it's being talked about quite a bit in the last week. So for our larger practices, I think we got them $750,000 for over the 2 years, close to $1 million for another 5-location practice. And so it's a lot of money that's on the table. After taxes, saying your 30% bracket, it's $700,000, but still that's $700,000 you didn't have before from that $1 million credit. So pretty big deal out there.
Wow. So interesting. Okay. What else? Tell me more.
So another item that's been pretty hot over the last couple of years is the research and development tax credit. And so that's been an item that's been around the tax code since I believe the 1980s. And it's mostly been captured by manufacturers and tech startups where they're dealing with some kind of uncertainty in their process or the product that they're developing. And so over the last couple of years, we really looked into it, our research and development tax group, to see if this applies to our dental practices, because a lot of our dental practices have internal labs. At least some of those larger groups do. They have some internal labs, and they're dealing with a lot of, say, the night guards, and then also implants, and designing certain products within their house where there is some kind of uncertainty in the process and that product. And so it's really a payroll credit, because most of the credit is built off of the payroll that goes into developing that product. So all the doctor wages, assistant wages, and so forth. So if you have a high amount of wages in your practice and you're developing certain procedure or doing certain procedures in your practice, and have a high enough count, it really makes sense to look into this tax credit. And it's a pretty big deal. Most average practice, if they're doing about, say, $2 million of revenue, there might be a $10,000 to $20,000 income tax credit. It's not a deduction; it's a credit. And so if your tax bill is $100,000 at the end of the year, that knocks it down to $80,000. So it's a pretty big deal. Puts a dent in the tax bill, and taxes are just another overhead item, for a business owner, right? So you want to try to minimize that overhead item and keep cash in your practice, or more in your pocket personally. And that's the goal of us advisors out there, to try to do as much as we can for our clients, so they understand they're in the best spot possible.
Wow, thank you. That's such an informational. I feel like I just walked away with my own brand new education.
Yeah,
look into these things.
There's a lot of areas out there for sure.
Yeah. Now switching gears just a little bit. So, a couple of my friends, Mark Costas and Perrin Desportis, they're putting a big thing together, and you're going to be there, right? Tell me more about that event.
Yeah, so it's a pretty cool event where there's two great minds, Perrin and Mark, are putting their heads together, and it's really directed towards docs who are trying to scale from clinician to CEO. So how do you get to that point where you're in the chair, more times than not, but how do you get to that point of scaling to become a group practice owner and really getting to the next level of where you want to go? And so there's going to be a ton of material, and it's very tactical material. Perrin could probably talk about it a lot more eloquently than I. He's one of those East Coast guys, and he's doing some great things over there. But there's gonna be tactical items of, from my standpoint, okay, financial statements. How do we get from here to there? Why are they valuable? What matters in the financial statements when you're going to seek capital? Items like that, and then also, tactical items of, okay, you're trying to scale, you get to that point, well, what do you do on the backside of it when you're selling down the road? So I think there's a lot out there. And then Mark is talking about, I think, a lot of the culture items within the practice. So I think he's seen and done a lot there in the marketplace, and has a lot of experience, coaching practices and facilitating conversations. So I think that it's just going to be a great content that's going to be shared with a lot of speakers in a compact two days. So it'll be a lot of fun. And it's out here in Denver in early October. So the first Thursday, Friday of October. It's a quick shot in the middle of the country. So if anybody is interested, they can go to Scaling from Clinician to CEO. Just Google that and you'll find it, or just shoot me an email or give me a call. We can talk more about it.
Yeah, very good. So if they did want to get in touch with you or your firm, how do you want people to reach out?
So my direct line is 970-999-8932. And then my email address is shaberman@ibailey. So SHABERMAN@ibailey, EIDEBAILLY.com. So it's always a mouthful trying to
we'll
shoot
put it
that
in the
email
show
address
notes.
out. Yeah, there you go. Sometimes I got to remember how to spell my last name in that long 50 letter line. So
yeah, you're a numbers guy. It's okay.
Yeah, I'm a numbers guy. I don't get into those spelling details.
Right. Well, thank you so much, Scott. Is there anything else I haven't asked you that you want to make sure we touch on before we go?
I think what you're doing out here is pretty cool. Getting a lot of good content out there that lives on the internet, and folks can go back and listen and try to get some value and some nuggets that they can take back and try to share with their friends, their colleagues, and improve their quality of life, improve their relationships. So I've had a good time following you for the last year or so, and seeing some of your material that's posted out there. And I think what you're doing is pretty neat in the industry, and it's super important. We have the same challenges in our office, culture, conversations with employees, and just trying to build that strong team internally. And so culture is a living, breathing thing, and you can't take a backseat to it. It's always got to be top of mind.
Right. Yeah. I think it's just all so important. The currency of your experiences is measured differently. So it's all got to work together. The health, happiness, and success. You can't really have one without the other. You can't really have one without the other, without feeling the pain. So
yeah, absolutely.
Very good. Thank you. I appreciate your compliments. Well, it was wonderful to have you on the show, and I'm so excited about the event, and I'm excited to keep talking to you more.
Likewise, Chelsea.
I appreciate you joining me for today's episode. Be sure to rate, review, and subscribe to the show, and visit dentallife.coach for access to additional coaching tools, as well as more episodes to help you create the dental life you truly desire.